June 9th. Circle that date. Write it down, tattoo it on your brain, because June 9th is the day the petrodollar officially dies. After exactly 50 years, the agreement that has underpinned American financial dominance since 1974 expires. Saudi Arabia has announced they will not renew, and the United States government has said nothing. Absolute silence. For half a century, every barrel of oil sold by Saudi Arabia has been priced in US dollars. Every country that wanted Saudi oil had to buy American currency first. This single agreement created permanent global demand for dollars. It allowed America to print money without consequences. It funded our deficits. It financed our wars. It maintained our standard of living. And in less than 30 days, it ends. Not with a negotiation, not with a transition period, not with a replacement deal. It just expires. And Saudi Arabia has already begun accepting yuan, rupees, and euros for oil. They have joined the BRICS alliance. They have signed currency swap agreements with China. They have made their choice. This is not speculation. This is not a conspiracy theory. This is confirmed by multiple financial ministries, central bank announcements, and Saudi government statements. The mainstream media is barely covering it. Your financial advisor has no idea. But the dollar's death warrant has been signed. The execution date is June 9th. Let me show you exactly what this means and what you need to do before the deadline arrives. To understand why June 9th matters, you need to understand what the petrodollar system actually is and how it has shaped the world for the past 50 years. In 1971, President Richard Nixon did something that changed everything. He closed the gold window. He ended the convertibility of dollars into gold. For the first time in history, the world's reserve currency was backed by nothing but government promises. The dollar became pure fiat. This created a problem. If the dollar was not backed by gold, why would other countries hold it? Why would they accept paper printed by a foreign government? Why would they not demand real assets instead? The answer came in 1974. Secretary of State Henry Kissinger flew to Saudi Arabia and negotiated a secret agreement with King Faisal. The deal was simple but profound. The United States would provide military protection to Saudi Arabia. In exchange, the Saudis would price all oil sales exclusively in US dollars. They would invest their oil profits in US Treasury bonds. And they would use their influence in OPEC to ensure other oil-producing nations did the same. This was the petrodollar agreement. It was never a formal treaty. It was never ratified by Congress. It was never disclosed to the American public. But it became the foundation of American financial power. Think about what this meant. Every country in the world needs oil. Transportation, manufacturing, heating, agriculture. Oil is the lifeblood of modern civilization. And if you need oil, you need dollars. Japan needs dollars. Germany needs dollars. Brazil needs dollars. India needs dollars. China needs dollars. This created permanent structural demand for American currency. It allowed the Federal Reserve to print trillions of dollars without triggering hyperinflation. The inflation was exported overseas. Foreign countries absorbed the excess dollars because they needed them to buy oil. It also gave America extraordinary power. If a country displeased Washington, they could be cut off from the dollar system. They could be sanctioned. They could be excluded from the SWIFT payment network. They could be starved of the currency they needed to buy energy. This was financial nuclear warfare, and only America could wield it. For 50 years, this system worked. It funded the expansion of American military bases across the globe. It financed the deficits that no other country could run. It maintained a standard of living that would otherwise be impossible. The petrodollar was not just an agreement. It was the operating system of American empire. And on June 9th, that operating system gets unplugged. Let me walk you through the sequence of events that brought us to this moment. Because this did not happen overnight. This was a gradual decoupling that accelerated dramatically in the past 3 years. 2022, the turning point. When America froze $300 billion in Russian central bank reserves after the Ukraine invasion, every country in the world took notice. The message was clear: dollar reserves are not safe. If you displease Washington, your money can be confiscated with no due process, no appeal, no recourse. Saudi Arabia watched carefully. They had been American allies for 50 years, but they also saw that alliances can change. Today's friend is tomorrow's enemy. The weapons that America sold them could be sanctioned. The dollars they held could be frozen. The protection they relied on could be withdrawn. Crown Prince Mohammed bin Salman began hedging. He opened negotiations with China. He welcomed Russian Foreign Minister Sergei Lavrov to Riyadh. He accepted an invitation to join the BRICS alliance. He was building alternatives. 2023, the China deal. In a stunning diplomatic move, China brokered a peace agreement between Saudi Arabia and Iran. Two regional rivals who had been enemies for decades suddenly normalized relations, and it was China, not America, that made it happen. This was a clear signal. The geopolitical ground was shifting. Shortly after, Saudi Arabia announced it would consider accepting yuan for oil sales to China, not exclusively, not immediately. But the door was open. The petrodollar monopoly was cracked. 2024. BRICS expansion. At the BRICS summit in Johannesburg, Saudi Arabia was officially invited to join the bloc. They accepted. The kingdom that had been America's most important Middle Eastern ally for half a century joined an alliance explicitly designed to challenge Western financial dominance. More importantly, BRICS announced the development of a new trade settlement system, a system that would allow member nations to trade oil, gas, and commodities without using dollars. Saudi Arabia signed on. 2025. The expiration. The original petrodollar agreement, signed in June 1974, was structured as a 50-year arrangement with renewal clauses. Those renewal clauses required active renegotiation. According to sources within the Saudi Finance Ministry, the kingdom informed Washington in late 2024 that they would not renew on the existing terms. The American side offered concessions, more weapons sales, extended security guarantees, diplomatic support for Saudi nuclear energy development. The Saudis listened, and then they said no. On June 9, 2025, the 50-year agreement expires. Saudi Arabia is no longer bound to price oil exclusively in dollars. They are free to accept any currency they choose, and they have already begun doing so. In April 2025, Saudi Aramco completed its first yuan-denominated oil sale to China. 500,000 barrels priced in Chinese currency. A symbolic amount. But symbolism matters. The precedent is set. The dam is breached. The flood is coming. You might be wondering why Saudi Arabia would walk away from American protection, why they would risk the relationship that has defined their security for 50 years. The answer is simple. They are betting that America is declining and China is rising, and they want to be on the winning side. Let me break down the Saudi calculation. Factor 1. China is now Saudi Arabia's largest trading partner. In 2023, China imported more Saudi oil than any other country, over 1.7 million barrels per day. The United States, which was once the primary destination for Saudi crude, now imports almost nothing. American shale production made us energy independent. We do not need Saudi oil anymore, but China does. When your biggest customer wants to pay in their own currency, you listen. Refusing means losing market share to Russia, Iran, and other producers who are happy to accept yuan. Accepting means deepening ties with the world's second-largest economy. The business logic is overwhelming. Factor 2. American reliability is in question. The Saudis watched America abandon Afghanistan in chaos. They watched America fail to respond when Iranian-backed Houthis attacked Saudi oil facilities. They watched America criticize Saudi human rights while demanding they increase oil production. They watched American politicians threaten to stop arms sales over the Khashoggi killing. From the Saudi perspective, America is an unreliable partner, distracted by domestic politics, constrained by a divided Congress, unable to commit to long-term relationships. China, by contrast, does not lecture about human rights. China does not change policy every 4 years. China offers consistent transactional partnerships. Factor 3. The BRICS alternative is real. For the first time in 50 years, there is a credible alternative to the dollar system. BRICS nations represent over 40% of the global population and 30% of global GDP. They are building payment systems that bypass SWIFT. They are accumulating gold reserves. They are preparing for a post-dollar world. Saudi Arabia joining BRICS is not symbolic. It is strategic. They are positioning themselves inside the alternative system before the transition. They want a seat at the table where the new rules are written. Factor 4. Demographics and diversification. Saudi Arabia is trying to transform its economy away from oil dependence. The Vision 2030 plan aims to develop tourism, technology, and finance. China is offering investment, technology transfer, and access to Chinese markets. America is offering lectures about democracy. Crown Prince MBS is betting that China will help Saudi Arabia build the post-oil economy. He is betting that Chinese investment, Chinese technology, and Chinese consumers will drive Saudi growth for the next 50 years. The petrodollar served the old Saudi Arabia. The Petroleum, or a basket of currencies, will serve the new one. Factor 5. Revenge. This factor is rarely discussed, but it is real. The Saudi leadership has not forgotten how America treated them after the Khashoggi killing. They have not forgotten being called a pariah by President Biden. They have not forgotten the threats to their arms supplies. The decision not to renew the petrodollar agreement is, in part, a message, a reminder that Saudi Arabia has options, that they are not dependent on American goodwill, that there are consequences for disrespect. Call it petty, call it strategic. Either way, it is happening. Now let me explain what the end of the petrodollar means for the US dollar and for the American economy, because the implications are profound and they are already beginning to unfold. Implication 1. Reduced global demand for dollars. When oil is priced in dollars, every country must hold dollar reserves. Central banks keep dollars because they need them to buy energy. This creates a permanent bid under the dollar. It supports its value. It allows the Federal Reserve to print with relative impunity. When oil can be purchased in yuan, rupees, or euros, that structural demand disappears. Countries that trade heavily with China can hold yuan instead. Countries that trade with Europe can hold euros. The dollar becomes one option among many rather than the only option. This does not mean the dollar collapses overnight, but it means the margin of safety is gone. Every incremental reduction in dollar demand makes the currency more vulnerable. Every country that diversifies reserves puts pressure on the dollar. The dam has been holding back a flood. Now, it has a crack. Implication 2. Higher interest rates become permanent. For decades, foreign central banks have been the primary buyers of US Treasury bonds. They bought treasuries because they held dollars. They held dollars because they needed them for oil. This circular flow kept American interest rates artificially low. When foreign demand for dollars decreases, foreign demand for treasuries decreases. The U.S. government must attract other buyers for its $2 trillion annual deficit. Those buyers demand higher interest rates. Mortgage rates stay elevated. Credit card rates stay elevated. Business loan rates stay elevated. The easy money era is over. Implication 3. Inflation accelerates. When the dollar was the only currency for oil, inflation was exported. Other countries absorbed excess dollars. Now those dollars will come home. Countries reducing dollar reserves will sell. Central banks diversifying will sell. Oil producers accepting other currencies will sell. Too many dollars chasing the same amount of goods. That is the definition of inflation. Prices rise. Purchasing power falls. The standard of living that the petrodollar subsidized begins to erode. Implication 4. Geopolitical leverage evaporates. The ability to sanction countries depended on their need for dollars. If Iran needed dollars for oil trade, sanctions could strangle their economy. If Russia needed dollars, exclusion from SWIFT would be devastating. But if Iran can sell oil to China in yuan, American sanctions lose their teeth. If Russia can trade with India in rupees, exclusion from SWIFT is inconvenient but not fatal. The weaponization of the dollar created the incentive to escape the dollar. Now the escape routes are open. The petrodollar gave America power beyond its economic size. That power is diminishing with every oil barrel sold in a non-dollar currency. Let me make this personal, because the end of the petrodollar is not just geopolitics. It is going to affect your daily life in ways you can already begin to feel. First, your purchasing power is declining. The petrodollar subsidized American consumption. We could print money, send it overseas, and receive real goods in return. Chinese factories, German engineers, and Saudi oil flowed into America in exchange for paper we created from nothing. That subsidy is ending. The goods that flowed cheaply will flow less cheaply. Imports will cost more. The iPhone made in China will cost more. The car made in Germany will cost more. The gas refined from foreign oil will cost more. Your dollars will buy less because they are worth less. Second, interest rates will hurt longer. If you are waiting for the Fed to cut rates back to zero, stop waiting. The Fed does not fully control long-term rates. The bond market does, and the bond market is responding to reduced foreign demand for treasuries. Mortgage rates at 7% might be the new normal. Rates at 8% or 9% are possible if Treasury auctions continue to struggle. The cheap money era that defined the 2010s is not coming back. The petrodollar made it possible. Without the petrodollar, it is impossible. Third, the stock market is at risk. American stocks have been valued at premium multiples because of dollar dominance. Foreign investors bought American assets because they trusted the currency. That trust is eroding. If global investors begin diversifying out of dollar assets, stock valuations must adjust. The money that flowed into U.S. equities will flow elsewhere. Emerging markets, commodities, and hard assets become more attractive. The American exceptionalism premium in stock prices begins to compress. Fourth, your job might be affected. Dollar dominance allowed American companies to borrow cheaply, expand aggressively, and dominate global markets. Higher interest rates and a weaker dollar mean American companies face higher costs and stronger foreign competition. Multinational corporations will struggle. Domestic companies dependent on imports will struggle. The job market that has remained resilient might weaken as the currency tailwind becomes a headwind. Fifth, the government will come for your wealth. The federal government runs a $2 trillion annual deficit. That deficit was financed by foreign buyers who needed dollars. When those buyers disappear, the government must find new sources of funding. Higher taxes are coming. Financial repression is coming. Inflation, which is a hidden tax, is already here. The government will pay its bills by taking more from you, either openly through taxes or quietly through currency debasement. There is no other option. So, what do you do when the foundation of American financial dominance is crumbling? How do you protect yourself from the death of the petrodollar? Step 1. Diversify out of dollar-denominated assets. Look at your portfolio. If everything you own is priced in dollars, held in American banks, and dependent on dollar strength, you are concentrated in a declining currency. Consider international diversification. Stock funds that hold non-US companies. Bond funds denominated in other currencies. Assets in jurisdictions outside American control. You do not need to abandon America, but you should not bet everything on American dominance continuing. Step 2. Accumulate hard assets immediately. Gold and silver are money that exists outside the dollar system. They cannot be printed, they cannot be debased. They hold value as currencies rise and fall. If you have $500, buy 15 ounces of silver. Real metal in your possession. This is your starting insurance against dollar decline. If you have $5,000, buy 100 ounces of silver and a quarter ounce of gold. Mix your metals. Silver for potential upside. Gold for concentrated value and international recognition. If you have $25,000, buy 500 ounces of silver and 1 to 2 ounces of gold. Consider allocated storage outside the banking system. Your metals should be accessible but not dependent on any single institution. If you have $100,000 or more, allocate 20% to 30% to precious metals. Consider international storage in Singapore or Switzerland. Diversify across jurisdictions. Think about how the wealthy families you admire have survived currency transitions. They owned real assets in multiple places. Step 3. Reduce debt aggressively. In a weakening currency environment, debt becomes more dangerous. If the dollar loses value, the Federal Reserve may raise rates further to defend it. Your variable rate loans become more expensive. Your ability to service debt becomes strained. Pay off credit cards. Pay off car loans. Consider paying down your mortgage if you have the resources. Being debt-free in a currency crisis gives you options that leveraged people do not have. Step 4. Build income streams in real assets. The wealthy survive currency transitions because they own things that produce income regardless of which currency is dominant. Rental properties, businesses that sell essential goods, royalty streams, dividend-paying stocks in commodity producers. Start building income that does not depend purely on your labor and your dollar salary. Even a small rental property or a side business creates diversification away from currency risk. Step 5. Hold physical cash for transition periods. During currency crises, banking systems can freeze, ATMs can stop working, electronic transactions can fail. Having 2 to 4 weeks of expenses in physical cash gives you bridge liquidity. This is not your savings. This is your emergency buffer. Keep it at home, accessible, in small denominations. If the transition from petrodollar to whatever comes next creates temporary chaos, you want to be able to buy groceries. Step 6. Stay informed and act before June 9th. The expiration date is known. The consequences are predictable. Yet most Americans will do nothing. They will watch the news on June 10th and wonder what happened. Do not be that person. Take action now. Buy metals now. Diversify now. The people who prepare before a crisis survive. The people who react after a crisis become victims. June 9th, the petrodollar dies. 50 years of dollar dominance ends. And the United States government has not said a single word about what comes next. But there is a specific indicator that will tell us exactly how fast the dollar decline unfolds. It is the metric that central banks watch obsessively. It tracks the flow of global reserves in real time. And right now, it is showing the fastest shift away from dollars in recorded history. I break down exactly what that indicator is and what it is signaling in this video right here. Click it now. The petrodollar death is not coming. It is here. And you need to understand what happens next. I will see you there.